This is the Southside School of Financial Freedom watch list and market report for the week ending July 11th, 2020. The market does three things every day: it goes up, it goes down, or it stays relatively the same. There are many possible reasons why the market goes up, down, or sideways: economic outlook, the price of oil, trade tariffs, interest rates, or even negative and or positive sentiment. That is the belief that things are not going to go well or that they are going to go well. This week the market was up. The Dow Jones Industrial Average increased by 0.96%, the S&P 500 increased by 1.76%, and the Nasdaq increased by 4.01% for the week. During the week, the market had two down days: Tuesday, July 7th, when the S&P 500 lost 1.08%, and Thursday, July 9th, when the S&P 500 lost 0.56%. The Dow Jones Industrial Average dropped almost 400 points on both Tuesday and Thursday. Meanwhile, the Nasdaq continued to hit new historic highs during the week. It closed at an all-time high on Friday, July 10th, 2020. The down days were attributed to Walgreens' disappointing financial results and more concerns about coronavirus resurgence in the U.S. On Friday, July 10th, the market's rise was attributed to news of a promising coronavirus treatment medication by Gilead Pharmaceuticals. The pharmaceutical company reported that its coronavirus treatment drug remdesivir showed a quicker clinical recovery time and a 62% reduction in the risk of death when compared with standard care. In addition to Gilead's treatment, other biotech companies are working on coronavirus vaccines. At least one company's vaccine is reportedly projected to be ready for approval by December. And then many more vaccines are to follow in 2021. Whether or not these treatments and vaccines will prove to be effective is anyone's guess. Vaccines normally take years or even decades to develop and be approved. It is probably more likely that a treatment will be developed before a vaccine. Gilead's announcement of a treatment sent its stock 2.16% higher on Friday, but the stock was actually flat for the week. Interestingly, XBI, a biotech ETF, fell 1.02% on Friday, but the ETF did gain more than 2% for the week. Gilead's good news was good for Gilead stock on Friday, and it was good news for the overall stock market, even though it was not necessarily good news for the biotech ETF XBI. Remember that the market moves on news, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over the medium to long term. Stock prices move in a random fashion, that is, up and down, but with an upward drift. While I can't predict what the market is going to do on a daily basis, I do feel fairly confident that the market will continue to go up because the powers that be want the market to go up. And one of those powers is the President of the United States. There has never been a president that talks so much about the stock market. It is his measuring stick. He wants the market to go up, so it will go up. He will use his influence to make the market go up. The stock market, though, has almost no meaning to your average worker, especially in this gig economy of workers. Most of the workers do not own stocks. So for those of us who do invest and or trade in the US stock market, should we use any down day in the market as a buying opportunity, or should we start shorting the market? That is, trade so that we profit as the market goes down. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. There are many market purists who criticize Wall Street market manipulators and bemoan what's happening in this juiced up market. I simply try to take advantage of the market. I take what the market gives me, whether it's going up or down. How do I do that? I apply the Southside trading strategy. The Southside trading strategy is to generate cash flow by primarily selling weekly put options on 3 growth stocks, labeling them Position A, Position B, and Position C stocks. I dedicate a certain amount of money to each position. I try not to exceed the designated amount of money for each position from week to week. I allow put options to expire when out of the money at expiration, and I allow put options to be exercised when expiring in the money. I also sell weekly call options on any owned stock as a result of purchase stock due to the exercise in the money put options. Optionally, I sell weekly put options on dividend paying stocks instead of growth stocks, especially when the price of growth stocks is not favorable. I also look to trade gold and silver ETFs and their options to take advantage of the vast illegal manipulation of the precious metals market by Wall Street insiders. Here are the stocks on one of my watch lists from the week ending July 11th, 2020. I do not identify which of these stocks I own because I do not want anyone copying my trades. I want you to learn how to develop your own trading strategy and develop your own watch list. Notice I said that this is one of my watch lists. I have about 20 different watch lists for various purposes, but this is my trading watch list, and I am currently trading some of the stocks on this list. In addition to the various stocks on the list, I also follow the gold and silver markets. GLD is the gold ETF shown at the bottom of the first column. Gold has been and is being manipulated by Wall Street. The price is being deliberately and illegally suppressed. As the price of gold rises, the illegal manipulators go into overdrive to try to keep the price down. However, they may be losing their touch. Gold prices have been on an upswing of late, and they may be off to the races. SLV is the silver ETF, shown at the bottom of the second column. Silver is also being manipulated by Wall Street insiders, even more so than gold. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index. Most professional money managers, that is mutual fund managers, do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list, What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? As of July 11th, 2020, my portfolio is outperforming the S&P 500 index ETF SPY. My portfolio is up 10.61% versus 4.36% for SPY for the year, a difference of 6.25%. I am beating the S&P 500 index ETF SPY by 6.25%. This week, equities, including puts, calls, and ETFs, make up 35.40% of the portfolio. Cash is 64.60%. The cash flow generated for the week was 2.43% of the portfolio account value. The account value increased by 3.96%. Meanwhile, the S&P 500 ETF SPY increased by 1.72% this week. I sold option contracts on 7 different positions this week, 4 calls and 3 puts that range from $209.35 to $1,465.97. The Southside strategy was developed over time, only after gaining foundational knowledge through experience and study. The Southside School of Financial Freedom promotes using the U.S. financial system to gain your financial freedom. In order to do that, you must read, save, and invest. RSI. Read, save, invest. I share my strategy for free because I want to motivate ADOS to start thinking about the stock market and learn as much as they can about generating income from the U.S. financial system. Develop your own strategy. Use mine as an example of what to do or what not to do. Ultimately, if the Southside strategy proves not to beat the S&P 500 index, then you will know what not to do. The Southside School of Financial Freedom is open to your critique. Teach us something. Share your strategy. If you want to learn how to use the U.S. stock market to become financially free, then visit the Southside School of Financial Freedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. Granted, some people are happy wage slaves, but many people are disgruntled wage slaves. People who operate a small business are workhorses. Yes, they are entrepreneurs, but they are workhorses. And yes, some workhorses are happy. If you are a disgruntled workhorse, you are probably going to go out of business. Trading and investing frees you from being either a wage slave or a workhorse. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales, How a Small Fish Makes Money Off Wall Street by Melvin C. Dunia. available on lulu.com and amazon.com. Thank you for listening. Please share, like, subscribe.